Hi there, traders. Welcome to today's live stream. Well, welcome back to the live streams. Happy to be back. Hi, Bruce. Hope you're well too. I'm very well, thank you. Yeah, got back from holiday yesterday, so markets still very kind of fresh to me for this week. Although I did obviously go through the week ahead and what was coming up for this calendar week. There's been obviously a lot of volatility over the recent week or so. So you're going to be interested to see how this week plays out. Obviously, as what we're going to do as usual is go through some of the data points that I'm looking at going into this trading week. We're going to take a look at the commitment of trade reports. Haven't actually had a look at a lot of reports at the moment, so we're going to do that a little bit together. So hopefully you stick around for that, and hopefully you enjoy that, and hopefully you can see the way I sort of break down the markets. But yeah, we'll get stuck in a couple of minutes or so. Ratish, I did have a good break, thank you. I hope you're doing well. Yeah, it was a nice little breakaway with the family. Nice to spend some time with my little nephew, to be fair. So yeah, it was a fun week, really fun week. Got to teach him how to look for crabs in the rock pools and stuff, which he absolutely loved. So yeah, it was a good break. It was a good time to get away from the markets as well, because we had a lot of chop last week, even though there was some really important data points coming out. Little bit of an interesting week. So I don't feel like I missed too much in the way of FX movement, because FX has been fairly range bound. Equity side though has been pretty interesting, so we'll talk about that as well in a moment. CG, hope you're doing good as well. Right, let's dive into a little bit of news, fundamentals. You know, we always like to look at the fundamentals in the markets. We always like to take a look at what's going on from a macro level, and then move our way up into sort of sentiment, and then go into the charts. So let's kick it off. Good afternoon to you, Vincent, as well. Yeah, breaks always good. You know, breaks are always good. I'm always a bit guilty of working on my breaks anyway, so I tend to do a lot of work regardless. But this time I decided to chill out this time and relax, so it was nice. But let's have a little look at what happened last week. I just want to briefly go over this, because obviously there was a lot of important data, especially when it came to Friday, because we had the last NFP report before the Federal Reserve meet on the 18th of September, right? So I'm just going to bring up the CME Fed Watch tool as well. We'll have a little look at where market is pricing the CME. So interesting data out of non-farm, right? So if I just open all these up here, we had a average hourly earnings that went up, which was very interesting to see. Obviously, people earning more. Essentially, all the jobs that were created were of higher value, so a little bit of an increase there on the average hourly earnings. Non-farm employment change came in at 142, okay, which was seen as negative because forecasts were 164. The important bit for me here was the revision. Okay, so we had a revision of last month's numbers, which is July's numbers, right? And they were revised down from 114 to 89k. So still some significant fragility within the employment sector and within the labour sector of the market, right? So that's something to note of and take significant note of, because although we saw an increase in the US dollar, that is still a revision that would make me feel that maybe the Fed are going to be a little bit more aggressive in cutting rates, and that makes me think that we might get a 50 basis points cut, okay, because Federal Reserve Chairman Powell was talking about the pace of cuts will be determined by the data that we're coming up, and then one of these was non-farm payroll. They've talked heavily about employment. So the unemployment rate, although that came down to 4.2%, which was in line with forecasts, we're still seeing fragility in the non-farm employment change. If I just grab the chart here, what I'm going to do is we'll just have a little look at 23, 24, and you can see the average, right, of jobs being created throughout the US is just declining. Okay. Now the unemployment rate obviously has been increasing. This was a little bit of a 0.1% downturn, which isn't too much to sort of to kind of make us think that unemployment is slowing down at all. I mean, if you look at the employment change, you'll have that in your mind that we're actually missing expectations to the low side on the past couple of drops there. So I think 50 basis points cuts now is looking a little bit more likely. Now, interestingly enough, we do have some more data coming up this week that includes the US in terms of inflation data. So tomorrow we've got core CPI data month on month, which is forecast to come in at spot 2%. So no significant change here in core CPI, which is what you'd really want to see is this starting to come in a little bit lower. 0.10 is in like showing no real growth there. Obviously, if it starts to go into sort of the minuses, it's showing that the inflation's turning, potentially maybe heading into deflation. But CPI month on month expected the same. CPI year on year is going to be a number that's been watched very closely as well. Forecast 2.6% over 2.9% annually. So that's showing quite a decent margin from where prices or CPI was at compared to the previous year. Okay, so same time last year it was at 2.9%, looking at it to be 2.6%. So how significant is this number going to be in terms of the Fed cutting interest rates? Now, I think if we see big numbers to the downside here, we see big revisions and big misses to the downside on the core CPI, then I think 50 basis points is going to be something that the Federal Reserve will have to look at. Now, a lot of people are saying that they should have cut in July by 25 basis points and then 25 basis points again, but that didn't happen, okay, although they have signaled cuts are coming now. What's interesting about the CME Fed Watch tool is the pricing of the cut, okay? So only 27% think that we're going to see a 50 basis points cut, okay? Now, that seems quite low when you look at sort of 73% as suggesting it's going to be a 25 basis points cut. I wonder how this will shift over the next week, and this will shift markets incredibly. And what I mean by that is if we see an increase in the chances of a 50 basis points cut and a decrease in a 25 basis points cut, then I think volatility in the market will be higher. So things like the VIX futures would be up. Perhaps we would be looking at how long-term bonds versus short-term bonds. So, you know, if you look at the sort of 2-year yields versus the 10-year yields, they will probably continue to move higher because the market will be favoring longer-term investment over short-term investments. So essentially, we'll see a lot of risk appetite in the market, and I think that will drive sort of yen to the upside as well. And I think that's something we need to consider going forward. So yeah, definitely something that's interesting to have a little look at. Whether we see CPI come in a lot lower would be significant to see this rise and this fall, and how will that impact markets. Now, if we look at the probability down here, it gives us a little idea of how the market's been pricing this over a day, a week, and a month. So it has, again, changed quite interestingly enough in terms of we've actually seen a 50 basis points cut chance weaken over a longer period of time. Hi, Tabo, welcome. So you can see, like here, for instance, 50 basis points cut a month ago, so this time last month, was showing a 51% chance of a 50 basis points cut, right? And that was just after that big sort of day that we had on the 5th of August, right? And then since then, it's just slowly kind of dwindled down. We've gone to 38%, 30%, and now we're currently at 27%. So the market's really trying to focus on the idea that the Federal Reserve are going to go for 25 basis points on the 18th of September. But we do have important things coming up, okay? And I think the pace of the cuts is what's going to drive volatility. I think if we get 25 basis points, then I think the market's going to be fairly okay with that, and volatility will remain fairly low. I think if we get 50 basis points, I think the volatility will be high for a short period, and we'll probably see a spike in VIX futures. Now, when I say VIX futures, what I'm looking at is the volatility index, okay, which is this market here. So basically, this is a weekly chart, this is a daily chart, this is a 4-hour chart. And we can see, obviously, last week, volatility index did rise substantially from 15.63 to the highs of 23.97. This was that Monday where we had significant rally in the VIX futures, which caused a lot of downside to the US dollar, a lot of upside to Japanese yen, Swiss franc, things like that. Now, seasonally, the VIX does typically perform well in September. Seasonally as well, stock markets perform poorer in September. For whatever reason, it could be because, people are back from summer holidays, large trading desks are back from summer holidays. There's some repositioning going on, so volatility can tend to be a little bit higher. So that's always interesting to take note of and take a little look at. So we should potentially be expecting a bit more upside to volatility. And like I said, in that case, we should be looking more for like, yen strength and things like that. So hopefully that makes sense so far. Let's bring in some sentiment analysis then. So let's kick it off with the currency strength meter. I showed this in a video yesterday when we were talking about the opportunities potentially on EURUSD, which I'll go over in a little bit. But Euro actually being a little bit supported at the moment. Now, do I necessarily like Euro upside? Not really. Do I like it against weaker currencies? Yes. So against Aussie and Kiwi, it looks quite good. But we also have to take into consider this week we have an ECB announcement where they're looking to potentially cut by 50 to 60 basis points this week, which is fairly significant. And we haven't really seen too much fragility in the euro, although against the pound it's weaker, against CAD, against Swiss, against yen it's weaker as well. So when I'm looking at currency strength and weakness and I'm looking for currencies to really buy or sell, I want to know how it's faring up against the other currencies, right? And that's what the currency strength meter does. It takes a currency, goes through each of its pairs, and then it evaluates how it's performing against each of those currencies, right? Sounds simple, right? So Euro essentially has been outperforming, but only outperformed two currency pairs really last week, and that was the US dollar, Aussie, and hasn't quite outperformed Kiwi yet, but Kiwi is looking a little bit fragile as well. But what this is also kind of telling us is how the market's viewing risk appetite, right? Because the Japanese yen and the Swiss franc remain stronger currencies, okay? And then we've got things like the Australian dollar being weaker, Kiwi dollar being weaker, and CAD being weaker as well. So that tells me that the market is more risk off than it is risk on. And that's where we should be continuing to focus in some of our attention in the short span anyway. So I like the idea of being a buyer of the Swiss franc and the Japanese yen, and I also like the idea of selling Australian dollars and New Zealand dollars. Okay, so that's what I'm really kind of focusing in on going into this trading week, these pairs here. Now there are some other plays that I like the look of as well, like a little bit of pound weakness at the moment. And that's more off a seasonal play, which we'll go over in a bit. So I'm looking to kind of sell pound against stronger currencies like the Swiss franc and the Japanese yen. Okay, so hopefully that makes sense. Any questions about the currency strength meter, let me know. Let me know if there's something that's different on your strength meter than on mine. But this is a couple of pairs. Actually, let's get chat involved today. Let's get a little thing out of this table here. What currency pairs do you think will be trending right now? Okay, now I feel like I've given a little bit of it away, but I'm just going to go like this. Out of that, what currency pairs do you think are going to be trending? Okay, let's get chat involved a little bit today. I know there's a few of you in today. You've all said hello, so hopefully I can get you involved a little bit. Let me know your thoughts. I want to know what currency pairs you think are going to be trending. Now, we haven't seen a lot of trends recently. Only really, mate, on sort of risk currencies. Irfan is I'm on the risk off theme. Went long on GA at London Open, 1968 targeting 60 pips for 2-1. Not doing good so far. Vincent, Aussie Yen. Cracking pair, I think, to have a look at going into this trading week. I think that's a good one. Yeah, Irfan with pound. Pound's an interesting market. So let me actually, I'm going to take this up here a second, just so I can log into my platform. So I don't do that live on stream. Let me just log in and then I'll bring it back. So there's a couple of things I don't like about the pound, right? There's a couple of things I don't like about the pound. So the first one, if I just take a look at the seasonal chart and just have a look at major currencies and just go over to the British pound here. This is the seasonal chart of the pound, right? Now, seasonally, not really performing well with what it usually performs well. It's not really following its seasonal pattern this year, okay? So what I'm going to look at, though, is look how positive August is, right? That seems to be a bit of an outlier for the average, okay? So over all years, August is not typically bullish for pound futures, right? So what I'm going to do is I'm going to go August is positive, and I'm just going to hit calculate, right? And it's going to bring up this, sorry, not even hit calculate. I need to go August positive, and it'll calculate for me. And what I'm going to do is I'm going to turn off all years. So now there is a 81% custom seasonal pattern. And what I've done is I've basically asked the conditions here to find out, okay, well, over all years, pound is typically bearish through August, but it hasn't followed that seasonal plan. So what if August is bullish? What typically happens in those years? And you can see it's pulled these data points out of here, right? So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 21 years worth of data, okay, that the algorithm here has pulled out, showing us what typically happens to the pound, British pound futures if August is bullish, right? And what we typically see is that through September, we can actually get a period of bearishness, right? A bearishness that can actually fall as much as it rallied in August, okay? So that's something to take into consideration here, is that typically if August is bullish, we can see a top in September, and that pound prices, British pound futures, can drive lower, right? Now, I know I'm talking about the futures price there, but the spot price is basically the derivative of the futures price, right? So it'll be exactly the same chart if you put them side by side, right? Just the prices will differ. So essentially what I'm looking for is pound playing out with this seasonal play? Now, if I click this little orange button here, it'll tell me that there is a 61% win ratio here, okay? And if we go have a little look into the details, we can see that the annual pattern returns. So this is whenever the seasonals have shown a bullish August. This is what typically happens through the next September, okay? So on average, we can see around about, I'd say, a 3% decline in pound US dollar. Now you might be thinking 3%, that's not a lot. But if we go over to pound US dollar and we have a little look at where 3% takes us. So I'm going to just go from the current high here. I'm going to have a little look at where 3% drawdown could take us on average, okay? So it could actually see prices come more down towards the 129 handle more than anything, right? So for me, pound could have a little bit more downside to come if it does follow the seasonal pattern. Okay, and the beauty about following this seasonal pattern is we can add a few technical conditions into that, right? So first of all, pound's in an uptrend, right? On a weekly chart, you know, it's in an upward trend. So that kind of goes against our analysis, but it's good to understand where price is on a higher time frame, right? So what I look at is the fact that price is making higher highs and higher lows, right? Now the market is in the secondary phase, right? So let's call this phase 1, okay? And let's call this phase 2. Okay, now within those structures, right, you'll see downward trends develop on shorter time frames, right? So if I highlight to you here this move that happened here back through 15th of July to the 5th of August, and what I'm going to do is just highlight the 4-hour time frame. So I'm just going to open this one up here, and I'm just going to go to a 4-hour time frame, and we're going to have a little look at that period, right? What can we see happens? Well, price was making an upward trend into resistance. It then broke that trend to the downside, okay? Then market continued to make lower lows, okay? Until we got into demand on the weekly chart. That demand reversed. So what we can do is use that similar platform, right? If I come over to the 4-hour chart now, is price making lower lows again? Well, yeah, so you can see we had this kind of head and shoulders pattern. This is something we discussed at the time, and we talked about a potential short off the neckline down into supporting areas, perhaps one spot 3075, or you know, this zone in here, right? Because that is technically an area where price found resistance. Could it turn into support? Potentially. But what I'm going to be focusing on is this 4-hour chart. I want to see this 4-hour chart continue to make lower lows and lower highs. If the conditions change here, okay, let's say we get into this support zone, the market starts making higher highs and higher lows, then the seasonal play that I'm looking for with price potentially coming down towards 129 and below is probably not going to play out. Okay, so we have to just be aware of the conditions and the situation that the market is in, and that's what I'm trying to follow here on the pound. So I know you've said you've jumped on the risk on theme with pound Aussie, right? But seasonally pound can be a little bit weaker, so I would always go and try and trade the, say like you wanted to be short Australian dollars, I'd go and try and find the currency that is really strong at the moment. And there's two, right? And Vincent pointed one out here, which was Aussie yen. So if you go to Aussie yen at the moment, you can see that price has been very bearish last week. Okay, there's potential for us to come into the sort of 93.57s, which you can see here on the daily chart in the top right hand corner. The market could be, bearish technically here. If we look at the 4-hour chart here, I can see that price has just broken through and closed through a minor trend line support, right? So what you could be looking at is going, okay, well, I want to be trading Aussie weakness. Can I go and trade it against a currency that is strong at the moment? One of those strong currencies is the Japanese yen. Could you look at maybe something like this to try and target down at the 93.50s, right? If I go to an hourly chart, how does that look? Well, you can see we came up into this area here and rejected the 50 moving average, starting to break minor support zones now. So that's something I would always take into consideration, right? Yes, you want to be short a currency like the Australian dollar, where it's super strong. Pound has been strong, but is it going to remain strong? Let me just add one more thing into that as well before I move on to the questions that I can see there. Let's go take a quick look at sentiment, right? And I always like to look at Forex sentiment because I just think it's a good barometer of what we're looking at, right? Now, here it's saying that 84% of retail traders are short right now, which makes you think you want to be long pound, right? But let's take a little look at the data. So if I'm going to come down to this little sentiment area here and I'm going to turn it onto positions, turn it onto a daily chart, okay? Now, what you'll find super interesting about this, if you haven't seen my video, short video today, what I find super interesting about this is how aggressive the short contracts here on the retail positions, or short positions essentially, have dropped off significantly, right? And we can see that long positions are now starting to potentially come back into play here. Now, the last time this happened, right, was over here, where we had that downward move here, which is the area we spoke about in July, where we had long positions moving up, short positions moving down. Look how price reacted to that data. Okay, we saw a significant drop in the price of pound US dollar. Here as well, we can see that short positions moved lower, long positions moved higher. What happened with price? It found a top, it moved lower. So are we experiencing the same thing here again, right? Are we going to see that pound positions are actually going to move lower? Okay, so for a long-winded way, we can kind of look at the WCS method, right? Okay, and I always talk about this. So why do we want to be in a particular market? Why am I looking at potentially shorting pounds? Okay, so seasonal. You have to ignore my writing with my mouse. Seasonality is showing that we want to be short. Okay, retail sentiment. Okay, retail, short. Now, do I have the conditions, right? So C stands for conditions. Okay, now the weekly chart is still bullish, but we know we're in the phase 2 of the weekly chart, and the 4-hour is in a bearish trend. So that kind of ticks the box for me there. Now it's about applying strategies. Can you apply any kind of trading strategies to enable you to enter those positions essentially? You know, can you look for just standard trend strategies, you know, breakouts, things like that? Can you go and look for those type of things there? Okay, so hopefully that makes sense on the pound, or kind of answered a little bit of your theory there as well, Irfan. But yeah, just kind of going through the currency strength. Aussie and Kiwi short, yes, not really moving though at the moment. Yeah, it's just kind of holding still. That's probably because of what the time of day that's being traded at the moment. Vincent, can you please look at COT data on the yen on Markets Made Clear? Yeah, I can have a little look at that. Let me just see what these other questions are. Just hopped in. What have you covered? I've just covered pound so far, really, and some of the data. MJ Forex, please, what do you think about pound US dollar in relation to the COT data? Let's have a look, because we're just talking about pound right now. Let's go and have a little look at COT. I don't think the COT's changed too much. The only thing I would say is the open interest has become quite high on pound. So if I look at just pound sterling here, in general, there's not really, you know, significant signals. If I look at the commercials, they've increased their short positions again, nearly back into extreme levels. If we look at the non-coms, they're long again, which is because they're trend followers, so they're back long again, but again nearly approaching extremes. If we have a little look at here we go, COT report simplified. Let's go and have a little look at the simplified version. One thing that stood out to me from the COTs here, I need to build my own COT indicator because it's a little bit of a mess. One thing that stood out to me was the let me just increase the thing here. Open interest, right? So the open interest on pound at the moment, pound futures, this was the 3rd of September. So I don't know where the 6th, when was the last report? It would have been, should have been, oh yeah, third would be the last report. We've got another report coming out today to be released on Friday. So open interest is at similar levels where it was in the 16th and 23rd of July, right? Now, we know what happened there, okay? If we go back onto those COT reports, go back to the chart. This was around this period here, right? That pullback period there. So the open interest is in a significant area in line with what we saw here, where we had 1, 2, 3, 4 weeks of downside. So that's why I like the idea of pound moving lower there. Vincent, can you cover COT data for yen? Yep, let's have a little look at that. Let's go back to Markets Made Clear here. let's have a little look at the Japanese yen. Now, at the moment, it's showing a short signal, right? Saying that we should be short Japanese yen. But with yen from a commercial side, right, it can be at these periods for a long time before we see any kind of catalyst come in. So from a commercial standpoint, not too interested in the sell signal here as well, because of the market conditions at the moment. And you know, it's like I always say to you, criminal traders are really rubbish at timing things, right? But they're good just to give you an overview of what's happening within the markets, but they're not very good at timing things. So if we look at the non-coms, okay, I might just change the graph over actually. Let's get the non-com positions on the top. And then I'm going to delete that. You can see that the long contracts in the Japanese yen at the moment are increasing. Okay, and non-coms are managed money, right? So they're traders, they're large speculators, they're making money off of the markets. So in general, you want to be following what they do until they reach aggressive extremes, right? Now we'll just go back over to this report in here. Obviously, it's not as easy on the eye to see. But what's interesting about the Japanese yen at the moment is they are at extremes, right? You can see that here. If I just go back here, you can see it on the, I'll just take the shorts off and just look at the long positions. They're at extremes, or at extremes that we haven't seen for how long? When was the last time we had an extreme here? 2016. So they are long Japanese yen more than they've ever been since 2016, which is quite significant. Now, does that mean I'm going to go out today and short Japanese yen? No, because I still think we're in that period where the yen could be stronger. I will start to look at it potentially as it approaches key swing highs and key swing lows, though, to see if that is an area where we do start to see a little bit of taking profits essentially from those speculators. Now, also, you can see I would rather, if I'm going to look for a real big swing in the market as well, I like to look at extremes. And although the extremes are being met, we haven't reached the extremes that we've seen significantly in the past, right? This was 2016, where we had two sort of extreme points within the market. Now, the first point here was also in 2016 in May, and you can see we actually had yen rally aggressively higher, continue to rally aggressively higher until those contracts kind of reached extremes again, and we failed to break higher. So the market then sold off on those extremes. So essentially, I'm looking at how does the report reflect with previous points in the past, right? So I'm looking at this little area in here, and I'm looking to see, okay, well, I would really be interested in shorting Japanese yen if we met contracts like we did back in 2016. Also, if we were at these previous swing highs, because I like to look at those areas of resistance. Now, remember, COT's built off of weekly charts, right? So if I go to dollar Japanese yen here, now just flip the chart because it's inverse, and I'm just going to open this up. And if we look at the weekly chart, we are in an area of support, this demand zone here, okay? But I also quite like this zone as well, which is sort of a little bit lower, down towards 138.60s, and this area here. Why do I like this zone? Well, although this was a very strong turning point for the market, there was also a strong turning point here. There was minor resistance through these levels as well. So this area here is arguably a very strong area of interest. So if we were to kind of breach a little bit lower here, then I quite like the 138 before seeing a little bit of a rebound. So I'm just looking to see, will we follow the seasonal play through to September, or sort of end of September? Let's have a quick flick over to sentiment as well. What is the retail positioning in these markets? Let's have a look. Where's dollar yen? In here. Okay, so here's dollar yen. Let's go to positions, daily. So we can see really that they are long in dollar yen at the moment, retail. Okay, so they are looking at long positions in dollar yen. And you can see how that's impacted on price again. Look, right? This whole period where price was rallying, what were retail doing? They were selling dollar yen aggressively, right? Because they thought that the market would sell off. Okay, so they were selling aggressively. What did the market do? It rallied. It sold off aggressively. What are they doing? Increasing long contracts, right? Because they think that because the market is falling, they should be buying the market. Okay, and you can see that the market has continued to fall. So what's happening really here is we can see short contracts are still falling off, but long contracts are still getting higher. So I still feel like there's some downside to come in US dollar, Japanese yen, just from a retail perspective. Hopefully that helps answer some of your question there, Vincent. What other questions have we had? What's your bias on all yen in general? I think it's bullish. I think it's bullish for a little longer. Can't you cover all dollar pairs? Yeah, I can do that in a moment. Please can you do a video on COT open interest on some side to use and their indicators on TradingView and their indicators on TradingView. Are there COT indicators on TradingView? COT. Oh, okay, yeah, COT. This one seems a popular one. What's this one? Commercial, non-commercial versus commercial. Non-speculators, commercial. Okay, where are they getting their data from? Okay, they're getting the data from Quandl. Okay, so this is only used for commodities. So you can only use this on commodities. I imagine it should be tied to the futures market, right? So this one's using Euro FX futures. So if you want to use, just a quick tip, I guess, if you want to use COT reports on TradingView, what you want to do is you want to get some futures assets up, right? So we'll just come down to 6E, which is Euro futures. I guess if I type in COT, I've not actually seen these before, so I'm just going off the plan here a little bit. Let's click onto this one. Let's see what happens. Nothing happens. Why is nothing happening? Still loading. Oh, okay. Will that go up to a weekly chart? It's interesting. Why is that stuck like that for that long though? Unless they haven't updated it for a while. So let's have a look at the settings. So the commercials are the light. I'm going to put them as yellow, white. Large speculators will put as yellow. Small speculators is an interesting one to have. Okay, so really speaking, you'd be looking at extremes on this, right? When the market comes into extremes. So this is just going to be the net, right? So the commercials are the white line. Non-commercials are the yellow line. Can you turn those off then? Oh, that's interesting. I don't like the fact that this hasn't updated since December 24. Why is that? Has the guy just gone or something? Is he not getting the data from Condal anymore? Because that shouldn't have stayed 18,000 contracts, should it? Let's go to pound. I've never seen these before, so this might be a good video idea in the future, just to see if we do get any kind of cut indicators on. Why is that not showing up now? Does it only work on euro? Oh no, here we go. Japanese yen. Why is that not working on pound futures? Yen futures. Does it work on oil futures? Yeah, gold futures. I don't like the fact that this hasn't been updated. It looks like it could have been a cool indicator, but the fact that it hasn't been updated since the start of the year, I don't know whether that's because I've got some settings on here or whatever, but you know, because that hasn't been updated, that's quite poor, I think. So maybe if you find a cut indicator that you like on TradingView, let me know, and I'll review it and see if it's any good or not. So if you have any suggestions like that, then let me know. But other than that, nothing really to show there. Let's go take a look at your dollar pairs, or let's have a look at the dollar index then, because obviously the US dollar index, an important index to have a look at, and it's shaping up quite nicely for the week essentially. Now, what was quite interesting about this on the weekly chart, price came into those 101s, rejected, and now we're kind of sitting above that level. If we go look at the daily chart, you can see price is making a sort of pattern which could suggest that it's going to continue to push back into resistance, maybe back to the moving average here. If we look at the 4-hour chart as well, very similar. The market's kind of forming potential bullish breakout pattern there for the US dollar. So the way I kind of view that is, if you're looking for maybe an opportunity within the markets, I'd go and flip over to euro. Euro, like I said, is a little bit vulnerable at the moment, and I think that if we were to see some downside, or if you wanted to be a buyer of US dollars, euro dollar is a place I would happily go and have a look at doing that. Again, if we look at the weekly chart, we're starting to break down through some significant areas of support. We've broke this daily area of support in here. If you look at your 4-hour chart, you've got that breakdown, and the market's making lower lows and lower highs again. So there's some good opportunity, I feel, here for some downside on euro US dollar as well. So I quite like that market. I also like Aussie US dollar. If I just actually flip over to Aussie US dollar here, now lots of swings in the Australian dollar market, right? We've seen some huge swings, and that's largely down to the fact of this risk on, risk off situation in the market. But recently we've come up into this previous swing high, which is this 0.68 handle, and we're breaking down quite nicely. We've had this almost head and shoulders pattern form in this market, right? So looking really to see, can we see a continuation of this? Looking at the 4-hour chart as well, looks to be failing to kind of break higher. Now, I did have an alert set up here because I was looking for Aussie US dollar to punch back up into this zone here before looking to get short. And it hasn't kind of come to fruition yet. You know, I've got my alert set at 67.20s, looking to see if we can get a bit of a pullback in and around this area. Now, this support is just based off this daily chart high back up in here, right? So that's all that's based off of, is a potential for price to find a little bit of support in this demand zone. So what I was hoping to see was price push back up into this level before looking to take it short into that sort of demand zone in there. But it doesn't look like I'm going to get it. Doesn't look like I'm going to get it. You know, Friday with the NFP reports and stuff, we had that move lower, and dollar gained some strength. So yeah, any other questions so far, guys? But let's go take a look at, so pound, like the idea of being short on. Aussie, like the idea of being short on. Aussie Swiss, like the idea of being short Aussie Swiss as well. Weekly, bearish, significant bearish close last week. We've got these opens and closes at 55.80s that I quite like the look of. If I just open that and sink that into the layout in and around this area here, which on the 4-hour chart is down at this area here. You know, look at, again, just kind of focusing on that 4-hour chart in line with that weekly. You know, we're starting to break down through areas of support and resistance now. That to me looks pretty good for potential continuations. You know, you could look for a couple of pullbacks potentially down towards 55.80. Now that really comes from the currency strength meter, right? You know, if we look at the Swiss franc gaining strength again back into that reversal zone. Aussie, a weaker currency. So I'm basically trying to look for opportunities on Aussie Swiss to the downside at the moment. So like that little breakout there that's happened on this is the hourly chart, sorry. But just flip up to the 4-hour chart. There's the breakout on the 4-hour chart. So yeah, I'd like to see a bit more downside on this. Like I said, I was hoping to get a bit more upside to Aussie first before we saw the downside. You know, quite like the idea of maybe getting short up towards the 57 handle here. You know, even if I was to put some like volume analysis into this as well, you can see that there's sort of a large area through here where I quite like the idea of price coming back before seeing some downside, but we might not get that. We might not get that. Price may just continue to move lower. So I will set an alert there just in case, but looks to me like we're going to just see a continuation of that price action at the moment. Which platform can I use for COT and open interest? So there's lots out there. This one is a free one. So COT report simplified. I'll just put that into the chat box so you can have a little look at that. This is very basic, right? Because it's free, it's very, very basic. And what I mean by that is it's not basic in terms of the information you get. It's just basic in what it tells you. So the way you can look at this is in one or two ways. First of all, you can look at the long versus the short contracts, right? If we look down here. Now, one thing that's kind of good about these is they color coordinate it for you. So red is extreme bearish, right? And green is extreme bullish, okay? So that's something to take into consideration. Obviously, the tones in between are fairly sort of neutral. By the way I gather it, yellow is kind of neutral, light green is their buying, and then sort of oranges are their lightly selling, and yellow is just neutral from that, which obviously makes sense. The only other thing I would keep an interest in is this column here: open interest short, open interest long. Okay, again, this can be used for continuations, or it can be used for reversals, right? And the best way to do this, right, and I will always say this, go take a look at this report here, okay, and then go and compare it to what happened on the chart, right? So I can see through this period here, okay, so I'm just going to grab this line, and we're going to go from this line here down to this line here, and just open that up. Okay, so from the 19th of December onwards through to the 6th of February, we can see that the open interest area was shaded extremely red, right? So what happened to Japanese yen futures? So all we need to do now is just go over here. Let me just actually do something a bit better. Let's take this here, okay? And what I'm going to go and do is go to Japanese yen futures, which is basically the inverse of dollar yen, right? Let's go to Japanese yen futures. I'll open up the weekly chart here, okay? And this is the way I would do it. This is the way how I sort of learned what to look for as well. is I'd go to the chart and I'd say to myself, okay, well, it's trying to show me this. What does that mean? So the open interest between the, what was it again, like the 12th, 19th of December, I think it was, in 2023. What happened through that period of time? Okay, so let's get 19th of December 2023 through to, when did it really start to flatten out again? So it kind of went down to the likes, when did it go extremely bullish, I guess? 12th of March, okay, 12th of March, so in and around that period there, right? Now this is a weekly chart, right? And you can see how price has been impacted within that area, okay, of that extreme bearishness on the open interest. That basically means that large speculators are heavily short at that time. It doesn't mean that they're extreme short. It just means that they're trading it a lot in terms of the open interest. They're very active on that, right? So if you go take a look at sort of your daily chart or even your 4-hour chart, right, in that period there, take off the session breaks. You know, how many opportunities could you have had within that period of time, right? If you were looking at sort of breakout, you know, or looking at lower lows, lower highs, and then you were looking to previous areas of resistance for sort of support, right? So or resistance, price is breaking down here, you've got this little pullback there, nice little lower high, market breaks down, market then transitions into a bit of an uptrend, you get a double top pattern, break out of that double top pattern, then we get that condition down. So it would have been good in this period of time to be selling Japanese yen futures, right? And that's all down to the idea that the open interest between that time, we'll just zoom in a little bit. I don't know if the COT reports, doesn't look like the COT report does that. I have to reset that then. Let me just open it out. Why is it so small on the screen though? No. Zoom in. Here we go. So we can see through that period, there's been a lot of selling, like aggressive selling. Now, if we look left, are they like selling at major extremes through that period? Not really. You can see it's like orange in turn, right? Okay. It's orange in turn. So there wasn't major extreme selling at that point. It's just that the open interest was a lot. Okay. Now, if we look down here, you've got extreme selling in July. Okay. Sorry, that's buying. Buying on the extremes side. And then shorts on the low side there. So yeah, I like to look at the open interest. Can be useful. You know, this is, where's that? 25th of June. Okay. Of this year. So that's here. Okay. And what were they doing at that point? They were getting extreme long on the open interest. So from the 25th of June, you've got an extreme long coming in on open interest. Okay. Now, if you look at the short positioning, they're extremely short, right? So they get into extremes at that point. And then look at the flip in price action. That's a 4-hour chart. If you look at it on a weekly chart, obviously, it's a little bit better. Trying to know that has price and COT. Yeah, Markets Made Clear. Markets Made Clear is I'd say a better platform just because you've got your chart in there as well. And you can have a little look at the positioning. Basically, the way Markets Made Clear is done from the COT chart perspective, you've got the percentages, right? Now, these percentages are basically where, or what it's measuring is the last 36 months of contracts are the commercials at extremes. So what it's basically showing us is that when it goes to 0%, is that over a 36-month period, these short contracts are at the highest they've ever been for that 36-month period, right? That's the same with the 18 months. So over a period of 18 months, we're at extremes, and 6 months. So you can see just above euro, right? It's got a 0% on 6 months, right? Because that's basically saying that over a 6-month period, the commercials are shorting more than they've done in the previous 6 months. Okay, so that's why that's at an extreme here. All right, now you can see the non-commercials are over here. They're not as open there. Okay, so you've got you can only really see percentage change long and short. Okay, so you can see that it says 63%, right? And it's flashing. Okay, what does that mean? It just means that on CAD futures at the moment, there's been a change of 63% long. Okay, from a non-commercial standpoint. So it's not necessarily detailed in that way. It's just detailed in showing you when extremes are, and extremes for commitment of traders show reversals. If you click onto this tab here, you have a different one. It's called COT extremes, and it kind of flashes to you where you're seeing some extremes at the moment. So for instance, you've got Australian dollar commercial bias at the moment is short. The Australian dollar on a non-commercial side is short, and non-reportables are long at the moment. So you basically want to be following what these are doing here. So that is why it's flashing there. So yeah, you want to be following that. And then you've got the COT report in detail. So this kind of shows you what I was showing you before, but this is just detail. So if I open Euro up, it's going to give you the information over the sort of past few months. I think it's might be the past 3 months worth of data in this little area here. So you're not going to get a lot of information from these pages. I like to use the COT chart page, and I like to use the COT index grid on there. Yeah, I can link markets made clear. Let me just do that. I'll take off the end there because that's obviously the member link. So I think, you know, if you go to marketsmadeclear.com, you've got the opportunity there to go and have a little look at that. Okay. Let's go take a look at some other pairs. How long have we been running? Wow, 57 minutes. I didn't even realize we've been running 57 minutes. So let's go take a look at some other pairs that I'm interested in. First of all, obviously, we've talked a lot about Aussie recently. Euro-Oz could be a pair that you have a little look at. The reason why I quite liked Euro-Oz in the first place was because of this very strong weekly bullish close. And then if you look at the price action, this is more from a technical point of view in line with the currency strength meter. You can see that the 4-hour chart has broken into sort of a nice new structure there. And basically, I'm looking to see, is the market going to continue to make higher highs and higher lows? So, you know, we could be just looking now to see if price will kind of change trend on these lower time frames and look to potentially look for opportunities on Euro-Oz. Other markets that I like pound Swiss. Obviously, I think this is a good market to have a little look at. I like the idea of being pound short from what we've discussed earlier in the live stream, where we talked about the seasonal analysis, the sentiment analysis around pound makes me want to be pound short. So pound Swiss makes a lot of sense to me. Pound yen makes a lot of sense to me for some downside as well. And then just to kind of finish it off, Kiwi Swiss and Kiwi yen are on the currency strength meter as well to look for some opportunities short. Right, guys, I'm going to leave it there. Obviously, we've nearly done an hour now, so I'm going to leave it there. Hopefully, you've learned a lot in this live stream. If you have and you've enjoyed it, please hit that thumbs up. Subscribe to the channel if you aren't subscribed already. Over 50% of the people that watch the videos aren't subscribed to the channel. It would really help me out if you were to subscribe. If you like the information, it's free to hit that subscribe button, free to hit that like button. And yeah, I'd like to get this video to at least 20 likes. So I'm going to leave it there. Thank you, everybody, for watching. Hope you have a great evening, and I'll speak to you again on Thursday. Cheers, guys.